Good afternoon, Manish. Really excited to be chatting with you for our audience. Speaking today with Manish Jain. He's the country managing director of Experian India. I've had the pleasure of getting to know Manish, and he's got a wealth of experience prior to leading Experian in India, and obviously Experian's one of the world's largest leading credit bureaus, and is so in India. He used to work with Sybil. So he understands the credit score space like no one else. He's been entrepreneur in a past life with Accelerate, working with banks. Manish, welcome to this discussion.
Thank you. Good afternoon. Pleasure is all mine, Aril. I'm happy to be
So
here.
Manish, when we were thinking of doing a credit score awareness week, and this is our second annual credit score awareness week, we could think of no better person than you. Today, right? Would you say that India is a very credit score aware country compared to all the other global markets that Experian is in?
That's an interesting question. I think we as a country are very much aware of a score, and like we all Indians love chasing a number. So from that perspective, people are aware about a score. But I think the consumers are not fully aware the impact of score or what exactly is the score and how it really matters in terms of how a bank uses a score or doesn't use a score to give credit. So yes, the short answer to that is they're very aware compared to the developed nations, maybe not.
Got it, got it. And tell me, you have the credit bureaus, then you have the banks, and then you have the
Hmm.
fintechs, right? Is it our
Hmm.
responsibility jointly to create this awareness of credit score, or do you feel one party bears a larger load than the other? How do you see this playing out in India?
It takes a village, so I think you need everyone, all stakeholders in the ecosystem. I would actually include even the education system in the country should include just like a basic financial literacy course, even for school-going kids. I would say anyone who is in the 10th standard and above should be aware of what's a credit bureau, what's a credit bureau score, because it impacts your life in many ways than you can imagine.
Great point, Manish. I couldn't agree more, right? So, your idea is even at a school level, we should be teaching children what is your credit score, what is a credit bureau. Now, if you were to take 2 minutes, right, and convey the most important points that you want people to be aware of in India about their credit score, what would you convey in those 2 minutes, Manish?
Sure. So I think the consumer should be aware that score is one of the elements that go into determining the credit worthiness of a consumer. Banks do, or any lender, not just a bank or a non-banking finance company, fintechs, they look at a score as an indicator of uh, your behavior on repaying loans. So it is an important element, but it is only one of the elements that goes into in giving you a loan. So a good score is good uh, compared to a bad score. So from relational perspective, yes, uh, but you should be aware. You should always. It's a net sum of your behavior on a credit obligation. So a lot of factors go in to arrive at a score.
Understood. So, three common questions asked by consumers at Bank Bazaar. Question number one, right? Does my score vary across bureau? And is that something that I should care about?
Yes, the scores do vary across the bureaus because the scores are built on algorithms, and every organization builds those algorithms based on their data set, availability of information, and no single method is the right method. There are multiple ways a score can be computed because score is supposed to predict a probability of default, uh, and a bureau might arrive at an algorithm which may consider an attribute A versus another bureau may consider attribute B. By just that definition, the scores can be different across the four bureaus.
Great point. So I don't have to be concerned if my score is different, but should I expect my score be to be plus or minus, let's say 30 points, 20 points? Is there any ballpark consumers should feel that, hey, this is normal?
So I think the consumer should view a score for a credit bureau by itself and look at the trend of movement of that score by itself instead of getting busy to compare bureau A versus bureau B versus bureau C versus bureau D.
Got
Because
it.
it not necessarily mean a 30 points or an 100-point difference mean good or bad between the two bureaus. It doesn't mean that way. Uh, though bureaus are trying to scale their scores similar, but not necessarily means anything. You have to view the score for a bureau by itself. So it is important to check your score on all the bureaus, in fact, uh, because you don't know which lending institute uses which credit bureau to assess your credit worthiness.
Got it. So, Manish, I also must congratulate you and your team, right? When I check my Experian credit score now, I see it's
Uh-huh.
updated as of June. So, one question
Yes.
people ask us is, how often does my score go up or down? So,
Hmm.
one key point you made is, don't worry about your score being slightly different in the four bureaus, but
Yes.
think about your score improving. So, how often should I expect my score gets reset and improves?
So, yeah, very good point, Adil. I think a consumer should be aware that score is not a stationary number that someone is computing every month or every year or every 6 months. It gets computed dynamically as and when you make a request for your credit report or credit information or for the score. The score gets computed on the fly based on the data available at that point in time. That's the first part. Second, how frequently that score can change. The score can change based on changes that you might have had behavior in interacting with your credit institutions in terms of loan repayment, new loans that you might have taken, or God forbid, you have defaulted on a loan, or you have demographic discrepancies across credit institutions. Uh, any change in any of these pointers might lead into a change in score. So, so the way credit bureaus work is they determine a score at that point in time when you pull your credit report or a credit score. So it's not a stationary number.
Okay, so it actually is determined at the time that I check my score. So
Correct?
presumably, this could change across weeks even, because at every point in time there might be different data by which this analysis is made. Fascinating.
Correct.
And how often, right, do you find that? See, at the end of the day, like you mentioned, the credit bureau is a custodian. So you're not
Correct.
judging, right? It's not your data. You're getting it from financial institutions. What do
Correct.
you think is an ideal state for India? How often should the banks be updating the bureau?
So, frankly speaking, banks should be updating the bureau as and when an activity happens on a consumer.
Got
But
it.
from practical and technology scaling perspective, I think the minimum should be monthly. Ideal would be weekly, if not daily.
Fantastic.
Yeah, but the reason for that is also because the kind of credit that consumers are seeking these days, they are taking those 3-day loans, 7-day loans, 21 days loans.
Right.
So if that data is not coming in real time, as in when it happens, then there will be what you call the data is not fresh to compute the real time score. You might get a score which is not true representation of your behavior today in interaction with the credit institutions.
Absolutely. So you bring up a great point, right? With people taking short-term BNPL loans,
Hmm.
it's so important that India with UPI with account aggregator we move to instantaneous. So it's a
Yes.
journey that we're going through where the data needs to mature. And like I said, I think you and your team have done something great. When I check my credit score, I feel so happy to see it updated. As of the last few weeks. Well done.
Yes.
Um,
Yes.
one of the things, Manish, we educate people on is when you consent and you check your score for yourself, that is a soft check. You can do it on
Mm-hmm.
Experian, you
Mm-hmm.
can do it on Bank Bazaar, you can do it on a bank site.
Mm-hmm.
And then there is a hard check wherein you finish a loan application online and the
Correct.
financial institution does a hard check. Now, help people
Correct.
understand what is the impact of a consumer consent driven soft check for education and a
Mm-hmm.
hard check before a bank disperses a loan. What is the
Mm-hmm.
difference between the two on your credit score?
Correct. Very, very good question. So, Adil, first thing we have to bust this myth of inquiries having impact on scores. It used
Okay.
to in the past.
Hmm.
Now it's very clear the bureaus do not use inquiry information, should not use, at least at Experian, we do not use inquiry information to impact your score. And there are various reasons for that. One, the bureau, you pull a bureau through, say, a payments app, or you pull a bureau, a bank pulls a bureau to check on your credit worthiness, or they want to give you a better offer. And sometimes lenders work in partnership with fintechs. Now, it might happen that on a consumer, 5 times in a month, an inquiry has happened, consumer participating in it, but not necessarily to seek credit. It could be for financial literacy, it could be curiosity, or it could be a genuine application. And you might have ended up entering different phone numbers and different email, not to beat the system, but it's just that say in a payments app one, you have linked your primary mobile, and payments app two, you have linked your secondary mobile. Most people have two connections, right? Many people have two connections. That doesn't mean that you're a fraudster. But what happens on the bureau, if I start factoring in this information, it might start impacting the algorithm on the score. So and with the guidance from the industry, Experian does not use inquiry at all in the score computation. So it doesn't matter whether it's a hard pull or a soft pull. I'm not sure if the consumer is even aware of an hard pull or soft pull. Probably that's something that we should educate as well. I
Got,
can go ahead
got it.
and actually close out on that as well. That will help because hard pull is something a credit institution makes an inquiry on the bureau when you make a credit application. Whereas
Right.
as a soft pull is a consumer consent driven information seeking behavior where a consumer is involved in seeing their credit profile on the bureau, and that is called a soft pull. Uh,
Right.
and it's very clear. I mean, now the soft pull, hard pull have stopped being of any significance because the scores do not have inquiries included in them.
Right. So you make a very important point, Manish, and I think this is the first time I've heard it articulated so clearly. You're actually
Hmm.
taking a position saying we've learned basis what's happening, and even
Yes.
a hard credit check will
Uh-huh.
not negatively impact your credit score. So
Correct.
that's a very, very interesting learning, right? That I had
Hmm.
on this call. Thank you.
Hmm.
Another important point, and you touched upon it, so I want to just discuss this. Now, we find that 20% of consumers have multiple mobiles. You're making an
Yes.
important point that that doesn't mean that they're fraudsters.
Correct.
This is, I think, very, very important, right? Because there is a view in the market that if you're using multiple mobiles, that, if your Aadhaar mobile is not linked with your application mobile, that something is amiss.
Yes.
But this is actually not true, right? Help me understand this better, Manish.
So let's delink from inquiry on the bureau versus actual credit when it gets opened and the data gets reported.
Right.
Now, when a credit is being taken and data is reported by the financial institution or the credit institution to a credit information company, say you have 5 loans from 5 different banks, and you have reported 5 different numbers
Hmm.
in that reporting, that
Hmm.
can surely impact your score
Got it.
because
Got it.
then that by definition is riskier. Not necessarily
Right.
you're a fraud, but it's riskier because it,
Right.
it determines your stability. Like uh,
Right.
most people living in urban cities might change their houses every 12 months. Like in Mumbai, we are forced to move out, and you have
Right.
forgotten to update your address yeah, with the oldest credit institution where you're running your home loan, for example.
Right. Right.
Cards you usually update because you need to get your statement and things like that.
Right.
Now, the beauty of the credit bureaus is they've learned from that behavior as well. Sure, you might have multiple addresses, but would it have extreme negative impact? Maybe not. And that's what I was talking about, that bureaus keep visiting the algorithms to see the impact of such attributes on risk. And that's
Right.
how their dependence on score changes. But having said that, demographics do impact your score. So if you're changing your house, you're changing your mobile number, you should proactively go to your credit institution to update that information and be as consistent as possible.
Interesting. Okay. Now, Manish, the flavor of the season now is home
Hmm.
loan refi, right? And it is the
Yeah.
flavor of the season because rates have peaked. Anyone
Yes.
today who's paying more than 9% is today
Hmm.
thinking, should I refinance and try and
Uh-huh.
get an offer below 9%? How does a
Yes.
refinance affect your credit score, Manish?
Again, as I said, the credit score works on data reporting from credit
Mm,
institutions, right? So,
mm,
for
mm,
example, you had your home loan for Bank A, and
mm,
you've decided to do a balance transfer to Bank B.
mm,
Two things you have to keep in mind. Bank A, when they have closed your loan, have they
mm,
reported to that to the bureau or not?
mm,
If they haven't, and there is a lag in that reporting, that loan remains on your file, and then a new loan has been opened by the Bank B because they have
mm,
taken on your loan. So on
mm,
bureau file, we will see two loans, which mean it will
mm,
impact your score.
mm,
Uh, so another reason why consumers should look at their credit report when they are doing this kind of credit activity to ensure
mm.
that the credit institution has closed their loan, else it will have an impact on the score. So
Got
because
it.
it is a function of number of loans, right? So if you still have an old loan open, like classic example is cards. When a credit card company merges with another credit card company, and if you have an hanging trade line still, or hanging credit line still reporting from the previous credit card issuer, it will show as 2x of your credit transactions, right? That will have an impact on the score. So you have to
Got it.
check your report and proactively approach your credit institution to close those accounts from being reported to the bureau.
Got it. So here's what I'm taking away. So one, if the closure and the opening is done seamlessly, then one can expect
There's
no
no
impact. However,
correct.
if both are open, there's a problem. Now, when this happens to me, um, what do I do? Do I contact Experian? Do I contact the bank? How do I respond to this?
So first is realization that that has happened. So I
Hmm,
would say the first consumer should keep sign up for subscription on credit
hmm,
bureau reports. A lot of
hmm,
us don't believe there is value in it, but there is absolute value in it.
hmm,
As
hmm,
we are taking more credit, smaller credit, bigger credits,
hmm, hmm,
you if you have subscribed, then you will get that information from the bureau saying there's a change and your score has changed.
hmm, hmm,
That should instill a curiosity in the consumer to go and check the report, why
hmm,
and why it has changed. Like at
hmm,
Bank Bazaar also, you push an alert saying there is a change in
hmm,
behavior, right?
hmm, hmm,
When I
hmm,
find that that credit line is still open of a bank
hmm,
that I had closed, you have two
hmm,
options. You can
hmm,
either come to the credit bureau and say, I've already closed that. Then I
hmm,
have an obligation to reach out to the credit institution on
hmm,
behalf of the consumer,
hmm,
and the credit institution have to look at it and close in a fixed period of time. And
hmm,
and there and it is very well established machinery in terms of
hmm,
how it should be closed.
hmm,
Or you
hmm,
can go directly to the credit institution as well,
hmm.
saying I have closed. Why haven't you updated reporting into the bureau? Uh,
That, wonderful. Thank you, Manish, for laying out two parallel paths, right? So either you can contact the credit bureau and there is a process to then resolve it via the lender, or you can
correct.
contact the lender. So thank you for laying that out. I think that
Uh-huh.
really gives
Uh-huh.
the consumer multiple models. And we should appreciate, the RBI also for making this issue more and more simple and
Correct.
including coverage of this under the ombudsman scheme. So
Yes.
that's great. Now, Manish, we've spoken about credit score in detail. People
Mm-hmm.
sometimes ask us, okay, I signed up at Experian, I signed up at Bank Bazaar, and I saw my score, right? And now I'm doing it
Yes.
monthly. So I've done level
Correct.
one. In terms of
Correct.
level two, right? What should I look at besides my credit score once a month and to see if it's
Yes.
going up or down? Level two, what else should I look at in my report?
So what you should look in your report is first, are there any credit obligations that are reflecting that you're not aware of, or
Hmm,
you don't even know of? And
hmm,
it could be for various reasons, right? For example, you took a credit from fintech through a fintech
hmm,
channel,
hmm,
but the loan was serviced by a lender, another lender.
hmm,
So you might see on your file a loan reported by bank B versus the fintech A.
hmm,
So first, you should be looking at your report. If you find any unknown names,
hmm,
then it's an obligation for you. I mean, not an obligation. It's as a good financial literate citizen, I
hmm,
should be curious. Why is it like that? And I
hmm,
should get help and understand either from my fintech organization or from the bureau
hmm,
again,
hmm,
uh, saying that I don't understand this. Can you help me address that? Right.
hmm, hmm,
Second, they should look at if you have multiple addresses.
hmm,
Many times it happens you have an old credit card, you've been holding on to it for 20 years,
hmm,
and you've never visited the bank or the branch after you took the credit card, and you haven't
hmm,
updated your address,
hmm,
and you still have your old addresses hanging on the credit bureau file.
hmm, hmm,
It has a lot of ramifications because banks look at that address as well to
hmm,
ascertain stability of your residential address.
hmm, hmm,
Right, and if they find disconnect, then that it just
hmm,
increases the processing time for the bank. Then they'll
hmm,
come and ask you, are you really staying at that address? But I see a
hmm,
different address. What are these different
hmm.
addresses? XYZ. If you
Okay,
look at your report frequently, you would know that if there are multiple addresses, you will make an attempt to get it consistent across your credit institution,
okay,
right? Then on a credit report, you should also look at your credit utilization.
hmm,
So suppose you have a credit card, and on that credit card you have 100 rupees credit line, and
hmm,
you tend to be always using 80 and 90 rupees of that 100.
hmm,
So 90%
hmm,
utilization. Now
hmm,
that's not viewed as a good, it is viewed as a riskier behavior.
hmm.
Because if anything happens in the life, you will default. I mean, the banks might assume you would default on that
Right,
on that credit line, right? So you need
right,
to ensure that your credit utilization don't go beyond a comfortable limit of. I wouldn't put a number, but I can share as Manish as an individual. I would try
right,
to stay within 30%,
right,
because it's the right thing to do in my opinion, because if your credit obligations are using away all the limit that you have, it is riskier.
right. Very interesting. Very interesting. So, Manish, at Bank Bazaar, we're
Hmm.
focused on being a co-brand credit card platform. I'm going to go
Uh-huh.
into three or four technical questions on credit card and credit score. And I think
Sure.
probably you're the best person who'll know the answers to this. Now,
Hmm.
let's talk about the credit utilization. Now, you
Hmm.
mentioned, right, I shouldn't max out on a 1 lakh credit limit card. I shouldn't spend 90,000 every month. So tell me,
Correct.
is it smarter for me to have, if I have two credit cards, to spend 45,000 on one credit card, to spend 45,000 on the second credit card, rather than put 90,000 on just one card? Is that smarter?
No, good question. When I said credit utilization, I meant across all your credit applications. So suppose I had
Hmm,
three credit cards
hmm,
and I'm using 80% of all three versus
hmm,
80% in one, and the other
hmm.
two credit cards I'm not using.
Okay.
Uh, that's okay. That's not a
Hmm,
problem.
hmm,
Maybe within that bank, they might view that
hmm,
as a risky behavior. But when you look at
hmm,
the credit bureau report,
hmm.
you're sitting at less than 30% utilization of your total credit limit available to you,
Got it.
which
Got it.
is fine, which is fine
Got it.
because which
Hmm,
only signifies is that you have a preferred credit card.
Got it.
Uh,
Got it. Very interesting. Okay. Second technical point. I have a friend who
uh,
has credit cards but never
uh,
uses them. Now, is this a good
yes.
thing or a bad thing to have credit cards and never use them on your credit score?
Not really. It may not have any impact. Unutilized credit. Okay, so it's again a relative.
Hmm.
I might have three credit cards and I have not taken any credit on any of those cards ever,
Hmm.
right? That is also a dormant behavior,
Hmm.
which might, I mean, depending upon how the algorithm is treating that variable
Hmm.
today, it might
Hmm.
treat you at a little lower level versus someone who is using credit. And because credit assessment is dependent on how you use credit and service credit, right?
Hmm.
So
Hmm.
if I do not know your behavior, then if you take credit, how do you service it? I
Hmm.
would not be able to assess you. So
Hmm.
it may not impact your score as such.
Hmm.
Uh, but in the when a bank underwrites you, they don't know how would you behave when if I give you credit.
Hmm.
So it is good to use credit. It helps you build your credit worthiness, if I may put it. Uh,
Hmm.
in some algorithms, it does impact, depending upon which bureau score you are using. That utilization within a good limit versus no utilization at all might have an impact on score. Not
Right.
necessarily all four bureaus. Some bureaus might.
Got, got it. And just as an aside, I remember, graduating in America, and the first thing we were told is
Uh,
take a credit card and spend and repay that credit card. So they said
correct,
you're
correct,
starting without a credit score. So it's actually good to take your first credit card, but make sure you pay
correct,
the bill back in full on time. So you bring up
correct.
a good point. Another question, right? People get add-on credit cards for their adult children, or they get it,
Yes,
for other family members. How does an add-on
yes.
credit card? And now the latest question, Manish, is I have a credit card from a Visa or a Master, and I
Hmm.
took a card from the same bank on the same limit on RuPay. Right, I took a
Hmm.
RuPay virtual card. Help us
Hmm.
understand how does all this affect your credit score?
So firstly, let me first answer the second question. The network choice has no impact on credit score. I mean,
Fantastic.
Visa versus Master versus RuPay versus Diners versus Amex versus anybody, it doesn't matter.
Hmm.
Because network has nothing to do with credit behavior as such,
Hmm.
right?
Hmm.
Now, to answer your first question on, can you articulate that again? I lost my chain of thought there.
Yeah, yeah. I
So
think
the
add-on card for
add-on card.
adult children.
Yeah, so the add-on card, if there is an additional credit limit provided because of that add-on card,
Hmm. Hmm.
because I am the primary card holder, then yes, it would impact. But if it
Hmm.
is within the credit limit and I'm giving facility to my child to
Hmm.
use that card, it wouldn't have any impact on your credit score.
Got
If
it.
the
Got it.
add-on card is increasing the credit limit, then yes, it will. Because as I said, credit limit is an attribute which controls or influences your score.
Great, great. And we're coming, to the end of our time. So two last
Yeah.
questions.
Hmm.
One
Hmm.
is, Experian has innovated globally on Experian Boost, right? Wherein
Yeah.
consumer can voluntarily submit additional data and improve their
Yes.
credit score. Just tell us how this
Correct.
concept works, and is it a concept that is good for India? Is it a concept that can come to India?
All right. So very, very good question. So let me first help the consumer or the audience understand what is this boost. Now, like credit obligations on a financial institution credit that you take, you see credit from utility companies. For example, your electricity bill, your mobile bill, your landline telephony bill, your rental obligations. Someone is giving you a credit of 30 days, 60 days, 90 days, depending upon what you're doing. And if I am performing well on that in terms of I'm always paying on time, I'm never delayed. So in United States, that information can be brought in onto my file to boost my score. I mean, it's not as simple as I'm saying, but the impact is saying that I don't have credit behavior on a financial institution, but I have credit behavior elsewhere. Shouldn't you give me some credibility of that to get my
Hmm.
credit, right?
Hmm.
Now, if I translate that to India, the provisions of the Indian law are very clear that as a credit bureau, I can only provide services on the data submitted by credit institutions. One. Two, if a consumer chooses to provide that data, as a bureau, I cannot change the score. But if a financial institutions want to give an additional credibility or credit worthiness, uh, a boost like product could be useful. I may not be able to change the score, but I may be able to facilitate that for credit institutions to consume this information provided by the consumer. Uh, and then we can, as a bureau, help facilitate the analytics and things like that.
Got it. Got it. So, last question, Manish, and this has been a fascinating discussion. I've learned a lot.
Mm-hmm.
I'm sure people
Mm-hmm.
watching as part of Credit Score Awareness Week are going to learn a lot.
Uh-huh.
I feel that credit score and a credit information system is a great, great service done by RBI and the bureaus in India over the last 20 years, and it is the
Yes.
bedrock, right, of creating a system in which people can trust and lend to each other.
Yes.
How do we communicate, right, that this is a national good
Yes.
versus any other angle that this conversation might take. How do you feel about how important is that India invested in building a credit score system, because China still doesn't have something like this, but Indian
Correct.
policymakers did it 20 years ago.
Yes.
Isn't it a matter of great national infrastructure importance that this was done?
Correct. I'll choose the word that you used, infrastructure.
Hmm,
I think what our country was able to do 20 years ago is to think that create an infrastructure of information that can be used by credit institutions to make credit access available into the deeper geographies of the country. Any consumer, how in the past, if in an absence of a credit bureau, bank would have to send someone to somebody's house, collect behavioral information, assess. There were a lot of judgmental aspect attached to credit underwriting 20 years ago, right? Now there is a scientific approach available. What that helps you to do it is I can disburse credit faster. Consumers can get access to credit faster. And credit is the bedrock for any economic development in the country. I mean, if taking servicing a 10 rupee EMI or a 1 lakh rupee EMI, I can get access to say 1 crore to run a business. That means I am doing business of 1 crore versus 1 lakh, right? Uh, and that can only happen through credit. Uh, and the infrastructure company that you just coined us, that's exactly is the job, a vision that country wrote 20 years ago saying, this is the right thing to do. We were late to enter into infrastructure, creating infrastructure when you compare to the global economies, but we've come very fast and very far in addressing financial inclusion. I think in the past, you could get money only if you had money in your deposit account, technically, or you provided a security of a house or something. There was no possibility of seeking credit without security in the past. Now your credit information is your security to seek credit. That's an amazing thing that infrastructure company has done.
fascinating discussion, Manish, and all the best to Experian and all the other credit bureaus to build the infrastructure, right, of credit in
Yes.
India. Thank you so much for this
Yeah.
conversation.
Thank you. Thank you, Adil. It was fun talking to you. Thank you so much.